Hi, let's cover my Elliott Wave analysis on Bitcoin on the 15-minute time frame, starting with this higher probability impulse to the downside labeled as a wave 1, 2, 3, 4, and a wave 5. Invalidation for this wave 4 is the 0.618 Fibonacci taken from the end of wave 2 to the end of wave 3. As you can see, I select the higher low just in case this low is corrective in a flat A, B, C. It also gives a little bit more wiggle room for the targets of a wave 4. And the invalidation for 4, the 0.618, sits at 109.3K, and the common target area is the 0.236, which is touched to the 0.5 Fibonacci, giving you an area between 107.9K and 108.9K. If we take a trend-based fib extension from the start of 1 to the end of 1 to the end of wave 2, we can also clearly see that this move to the downside extended beyond the 1.618, which increases the probabilities that this move to the downside is a wave 3 compared to a more corrective structure where you would look for a wave A, B, and a wave C. Preferably, if one considers an A, B, C, your wave C is not going to move beyond the 1.618. The moment that happens, the probabilities will always favor an impulse down primarily till proven otherwise by wave 4 touching the invalidation being the 0.618 at 109.3K. You can also see there's a channel on my chart, which is a base channel taken from the start of 1, end of 2 to the end of 1. Don't look at this wick, only visible on Coinbase. For me, wave 1 ended over here. And this base channel is interesting to keep an eye on. Generally, what you see is a 1, 2, 3, wave 4 moves back to the base channel, and then you get wave 5. Now, wave 4 does not need to touch the base channel, but it's still at least a channel to keep in mind where the boundaries of the channel can act as resistance. In fact, there are two invalidations. You have the 0.618, but you also don't like price to touch the upper trend line of this base channel. Now, after a corrective structure in a wave 4, you eventually look for wave 5 to the downside. And wave 5 should be a move to the downside, preferably on decreasing volume. So inside wave 5, most commonly we see an impulse as well, 1, 2, 3, 4, 5 wave structure. You can also have an ending diagonal, but that is less common. So 1, 2, 3, 4, 5, create another low, preferably on decreasing volume. So you can see over here, price move down, volume is increasing, which is what you like to see in a wave 3, as wave 3 most commonly has the highest amount of volume in an impulse to the downside and tends to be the most extended wave as well. And then you look for another 5 down on decreasing volume. But of course, internally, we do like to see a nice 5 wave move down. And we do have interesting support still to the downside here, being the daily naked point of control at 105. That's at least a level that I keep in mind if I open all of my levels, which I'll cover in a second in more detail. But you can see that I don't really have something going on here between the previous low over here and the daily naked point of control at 105. So it's definitely a level that I keep in mind as potential support for this 5. But if wave 5 would extend and go a bit deeper, of course, there's still levels lower as well. Level to level, see what we get by all means. In an impulse to the downside, you want to see a 5 wave structure. That is most important. Now, I already covered a little bit about like a bullish case where this move to the downside would be counted as an ABC. I included the letters W, X, Y just because the start over here is so ugly. Like this really looks like a 3, but maybe there's again some diagonal shenanigans, or it's just a very long 4 compared to a 2, whatever. That's like very low time frame stuff. I'm already on my lowest time frame that I like to analyze, which is the 15-minute time frame. I don't really like to go lower. But in this scenario, your short-term directional bias is the same. You're looking for a move up. Mind you that over here in an impulse, you're also looking for a move up. You're looking for your wave 4, or at least a sideways structure. But of course, it means you're going to have a move up anyway to reach the minimum target of a wave 4. So your short-term directional bias is actually quite similar. And you can see a little bit of a trend and turn methodology, part of Kuhn's theory, where you have your sharp move towards the downside here, and then price starts curving. Right? You get your overlap, sharp move down, overlap returns, price starts curving. And we do have a little bit of support. You got to pull a volume profile of this little part of the chart. And you can see here we have a point of control. You also have the value area low over here. So you can find some like local, I want to say local because it's a very small volume profile, areas of support. My main levels were a daily point of control and 108, which of course like price just traded through it because we moved down, increasing volume into the daily naked point of control. You're not expecting it to hold. I also had an order block over here in the previous video. Also don't expect that one to hold because we move down into that support with increasing volume. But in the moment price starts to curve, trend and turn methodology, you're going to be thinking, well, we're looking here for a move to end. This is a sharp structure down, but now we start to overlap, a couple more lows. That's what we like to see. The only thing we don't really like to see with trend and turn is that volume increases here as price is making more lows, but still you're looking for a bit of a move up. So if you would like categorize the trend and turn in different setups, then an A plus setup would basically have decreasing volume, and this is not an A plus because you have increasing volume, but the curvature and the structure of trend and turn is visible. So therefore short term, you would at least look for a little bit of a bounce. You also have the 886 Fibonacci, which I'll show you. Oh, I thought I had it in this particular scenario. We take the Fibonacci from this low to the high, toggle on the 886, touched. And it is common for price to respect the 886 and get a bit of a bounce, or at least not break it in one go. So you get a bit of a bounce after touching the 886. So you had the 886 here, you had some volume levels here as well. So there were still little bits and pieces of support, and we get a bit of a move up. And in both the wave 4, right, once price starts moving down and slows down, you're going to be looking for a bit of a move up. Of course, that can be traded because your directional bias is going to switch from down to looking for up because you get curvature here, right? Price is slowing down this move down, overlap returns, curvature. So your bias is going to be for an impulse down. We look for a 4 and a 5, but a 4 is still a move up. And if you're trading short from the 1-2 area, right? If we trade Elliott waves, preferably one enters in the 1-2s and exits in the 4-5s. So the moment you see wave 3, it extends, increasing volume beyond the 1.618. The moment you see this here, you're like, well, it would be good to at least take a bit of a TP. And for long opportunities, of course, this provides a long opportunity. As the probabilities increase, wave 3 is soon to be finished. You're looking at some local 4-5s here, and you're looking for a bit of a move back up. And then depending on the structure, you're looking at a wave 4 and another 5 down. Or alternatively, which is the alternative scenario, but still relevant, you're looking for a 3-wave structure finished here, and you look for a larger move up, which means you're going to invalidate wave 4. But the directional bias in the short term, which I hopefully explain well for your understanding, that the short-term directional bias is the same. Wave 4 is a move up, and after a C or Y, it's a move up. But then depending on the move up, you'll figure out what happens. Of course, probabilities, Elliott wave wise, extended wave, increasing volume, probabilities are higher for a 5-wave structure, even though this wave 1 is very messy. It's just the way it is at this moment in time. If you invalidate wave 4, that's fine. Then we consider this as a 3-wave structure to the downside. But at the moment, wave 4 is not invalidated, meaning an impulse has higher probabilities. But the short-term directional bias here was the same. You're looking for a move up, okay? Of course, I already then spoke about this, ABC or WXY with this messy stuff, but ABC, this second leg, of course, looks very much like a potential C if you want to count this corrective. So ABC, of course, would be a priority then. And an ABC, you can see I isolated this structure from the rest. However, an ABC structure down here quite simply means you're looking for at least a larger 3-wave. So if you invalidate wave 4 and you move to 109.3, you quite simply have a move up, you have a move down, you're always looking for another leg towards the upside. And in that particular case, we would have to consider probably as a priority the potential of a larger corrective structure. So a larger 3 and down, but that depends on the move up. Maybe there's I don't really like counting this. It's low time frame, lots of overlap and mess. There's opportunities to be found, right? Anyway, the probabilities of the weekend were higher to take the high because this move down was a higher probability corrective structure as well. So that played out with price taking the high. So there are probabilities to be seen, and there are opportunities within the wave structures and the areas of support resistance. But the bulls would look for like a 1, some 2 and a 3, or an A, B and a C. But of course, price touched the 886 now at the low, and the 886 does lower the probabilities for an impulse 1, 2, 3. It's not an invalidation, impacts probabilities. If price moves up impulsively, the probabilities would be initially higher. It's a C to the upside here, and then you go down after. Or you're looking for 3-wave, 3-wave, and you're looking for a wave Y, which can be flat or a triangle. I didn't really want to go to a 1-hour time frame, but you get the idea. Like ABC down, you're just looking for another leg up. It can be a C, can be a 3, can be a wave Y. You're just looking for a larger range / like the probabilities. Basically, if you invalidate wave 4 over here, the probabilities change to take out this high, and as a bare minimum, continue this range. Continue this range can also mean WX and a flat, take out the lows, move back up, wave C of wave Y, and then you go down. But you would expect the range to continue as a minimum, and you could take out the high depending on the structure that forms. We have to wait and see. Okay, hopefully I don't make things too complex. I was planning to only cover this, but you know, my excitement, it takes me to other places, which happens. So anyway, levels, we have the levels here. So these are my volume levels on my chart, my favorite levels as well. So here you can see the not touched levels. Mind you, this low was made exactly on the value area low, but that is already touched, so therefore it's not interesting and it's removed from my chart, and I only have the levels here that are not yet touched. Then we have the high time frame horizontals, time frame horizontals, where this white line was the double top, which of course has been touched, but I use it as a reference. It's just nice to have on the chart. Price moving down, you can see the time frame horizontals around price, and then we have a 2-day order block, which is up here. I still expect, and I said it in a previous video, if price can make it up here, I expect it to fill the gap and just move to 121. I don't expect too much there. Maybe you're going to do this, but then I kind of expect price to just fill this gap because there's not a lot going on. If I open all my levels, you can see the gap here as well. So, you know, the double top was basically my final level of resistance before you then really move into the gap. Got respected, move down, nice. But if you move up again, I expect to go to 121. So this is what's happening on the local time frame. If you want to know the daily time frame, please check out this video here. All right, so I didn't talk about probabilities in that video on the daily time frame. I spoke about opportunities, because on a higher time frame, the probabilities are higher. You're not going to be out of this range in no time. It's probably going to take a week or weeks. So there is time on your hands, basically. Right. So for clarity on a higher time frame to come, like let the chart come to you. Clarity will come. Right? Clarity will come. This move to the upside is very ugly. So it therefore having more patience and clarity works. But of course, locally, there's definitely opportunities to be had. So yeah, then we get to news. Wait, news. Monday, Tuesday, Wednesday, Friday. We have some high impact news. Times, Central European time zone. Make sure you trade safe, can increase the volatility. And then the probabilities from an Elliott Wave or conclusion. From an Elliott Wave point of view, one prefers to label the move down as an impulse till proven otherwise by wave 4 invalidation, which is this. Because of extension, increasing volume, moving way beyond the base channel as well, which is what you want to see in an impulse. Of course, for an impulse, we like to see a wave 5 on decreasing volume. If price goes down and volume increases, you have to be aware of further downside, and only wave 3 starts here, and then you go 1, 2, 1, 2, 3. So that is how probabilities change. If new info comes in, price moves down, volume increases. You got to be aware. On the number 2 spot over here of the conclusion, the second conclusion, as price locally was curving over here. So, oops. As price curves locally, and with curves I means it means this. As price curves locally, the directional bias is up. Trend and turn methodology, right? Which is my methodology. You're looking for the sharp move down, but you see overlap comes back. Couple more lows over here. Price is turning. It's on increased volume, which is not ideal, what I say here as well. So it wouldn't be an A+ setup, but based on the curving one looks for price to move up, at least in the short term. Your directional bias is looking for a bit of a bounce. Now then we're either looking for a wave 4 here in an impulse, or of course we have a finished 3-wave structure and you get a bigger move up. But the directional bias is the same. The opportunity is exactly the same. Right? Of course, if a wave 4 has higher probabilities at the moment, because an impulse has higher probabilities, you manage the trade initially different, right? Quicker TPs, better management, stop loss break even quicker, etc. Because you're expecting another leg down, and then you leave something running, and if you invalidate wave 4 perfect, you might look for a larger move, and you're still in the same position, but at least you're managing accordingly. And then the final bit over here, look for a bounce after an impulse finishes with its 4 5s into areas of support. So at the moment, an impulse has higher probabilities, cool. If we get another 4 and a final 5, preferably on decreasing volume, then we observe a 5-wave structure down, 1, 2, 3, 4, 5, and then we're looking for areas of support and how price approaches this area of support. Preferably, I would see an internal trend and turn inside 5, which basically means this is your 4 peak, blah, 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 that's your 4. And then you start with some local 1-2s, right? Overlap, quick move down, sharp, and then once again, you get overlap into an area of support. Preferably that overlap happens before, so you get this, and then you start slowing down, overlapping, and then you get a wick into the daily naked point of control and up. Of course, if price moves down further and volume increases, we can look for the exact same thing, but lower or lower. Just depends on the structure. That is something that I would like to see and something that I'll look for if price comes to the downside. And if price moves up and validates wave 4, we're looking at a 3-wave structure, which then changes probabilities to minimum continue the range or take out the high. Depends on the structure up. We'll see. So that is that. Hopefully this video is helpful or valuable to you. On the left side, you see the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.